Welcome everyone to the Financial Self-Defense Show on Channel 4. I'm your host, Joe Russo, with guests every week to help us take us through this economic crisis. This week I have a special guest that will help us understand the mortgage market. With us today I have Charles Myers from Myers Park Mortgage, located in Charlotte. Welcome to today's show. Charles, thank you very much for coming today. Appreciate it.
Absolutely. Thanks for having me.
First, tell me a little bit about Myers Park Mortgage.
Myers Park Mortgage is the largest independent mortgage company in Charlotte. We are the lender where we use our funds, we do our own underwriting, we close in our name, gives us control to close on time and do what we say, when we say, every time. But we are the largest independent. There used to be 4 companies that did more than us in Charlotte. Now there's 2. Now it's just B of A and Wells Fargo. Used to also include Countrywide and Wachovia, which are no longer in the market. So
pretty much you're not even a mortgage broker, you're a mortgage banker.
We're a mortgage banker, mortgage lender. Those are the terms typically used for us.
And the difference between a banker and a broker is that you can close your own loans with your own reserves.
With our own funds, so we create the package, we can close it on time. We don't worry about underwriting from another state or funds from another state, from another company. We provide all that, and then we'll close the loan and we sell it later after everything's done.
So you have a direct line to Fannie Mae and Freddie Mac, is that what it is?
Yes, we're a direct seller servicer to Fannie Mae, Freddie Mac, and we're also fully endorsed for the FHA
well, that's great.
stuff as well.
You get a quicker response, I guess, by dealing with your company.
Yeah, sure do.
Okay. Now I have a really totally disinterested question. Myers Park Mortgage and Charles Myers, what's the relationship?
There is a distant relationship with my father's side of the family, the Myers, and Joe Myers that built the park there originally.
Oh, is that right? So there is a connection.
Way back. Yeah, it's like a great-great-uncle thing, and there's been no financial benefit from that, except that it does kind of has a ring with quality, and that's the type of business we look for. Is
there any plans to have a monument of Charlie Myers in the park?
No.
No, not at all. What is the health of the real estate market with reference to mortgages? What do how do you feel it's going?
The real estate market, as we all know, is going through a tough turn right now. Charlotte held in longer than most areas, most of the country. It's now, I believe, having the same damages as other areas. The mortgage industry is still strong, as I'm sure a lot of you know, mostly because of refinances. Our purchase business, where people are buying houses, that is still very lackluster and slow, especially with the Wachovia announcement and the financial downturn in the marketplace in October. November was a very slow month. Now we picked up immensely at the end of December and January with the government support that's driven rates downward.
With the refinances, I know everybody thought Charlotte was bulletproof there for a while.
That's right.
And now all of a sudden all the banks are in trouble, and obviously it's not bulletproof, and it's actually one of the top 5 areas that's really gone downhill very quickly, I think, only because of the sudden turn with the bank situation.
That's a big question mark, as you're right. I guess we've taken for granted the luxury of having the 2 big banks in town.
Right. The credit crunch obviously is affecting credit everywhere. How do you feel it's affecting the mortgage situations? There's a lot of loose money a few years ago. I mean, how much has that tightened up?
Well, it's definitely tightened up, especially from the folks that were speculating or investing, and some people investing as a hobby. That's tightened up a lot.
Investing in properties.
That's right, investing in properties. As far as the credit crunch you're talking about and mortgages, and we're still lending money. This will be, January will be our biggest closing month versus any month we had in the last 12.
Because of refinances?
Yes.
Yeah.
And we did close more in 08 than we did in 07. A lot of companies didn't, but it's a great time to refinance. And the reason you refinance is to get a lower payment. So most of those folks that are lowering their payment will qualify unless there's been a job issue.
So basically it's the subprime loans you're refinancing. I think those are the ones that are bringing down the interest rate to make these houses more affordable?
No. We're not really refinancing that many of those subprime loans. I think a lot of those subprime loans have gone bad. And those folks probably were in over their heads and have let their credit get worse. If their credit's gotten bad, it was bad to begin with, or they wouldn't have had to do subprime. Subprime was their only option. If you didn't have much income, much down payment, had bad credit, that's the way folks did it. We really never did subprime loans. The stuff we're refinancing is not subprime. It's the people that are on a 30-year fixed in the 6% type range.
Coming down to 5?
Wanting to get down to 5 or below 5. That's what we're doing left and right.
I have two questions with reference to something that you brought up, credit getting worse. Are you finding the average credit scores coming down overall?
The average credit scores getting worse?
Yes, because I can't get a straight answer from Equifax or Experian. And my contention is that obviously everybody's credit scores are coming down, not because of anything they did, because a lot of credit cards are reducing the high limits on the cards.
I'm not seeing that much. For the folks that have been, it's rare in this market, or even in the past few years, you see a score above a 800, and that's still rare. But I'm not seeing the credit scores go down necessarily as long as those people are managing their credit well. If they're keeping their balance on their credit cards below 50% of the limit, the equity line's below 50% of the limit, paying everything on time, those scores still seem great to me. If your question is the general public score less, I may not be a good
That's pretty much the answer. I think the
read on
national
that.
average is coming down. I can't get a straight answer whether or not it is or isn't, or what the national average really is. So I've had extensive conversations with the representatives from the repositories.
Yeah.
And they say, well, the credit scores are calculated differently by each bank. So everybody has their own method of calculating the credit scores.
Well, the one thing I am hearing about, and I've only seen a case or two of it, is where the banks might be reducing someone's line of credit without it being on the consumer's request. In other words, you got a $20,000 credit card, they cut the limit to 10 because they're doing profiling of that borrower's spending habits. Say he shops at Walmart and they realize other people that shop at Walmart may not pay back well. But anytime you're taking someone's credit line down, if it bumps them back up above a 50% balance, that might hurt their credit score. So you're probably onto something there, that credit scores in general may be declining.
I'm always onto something.
Yeah. Well, the other thing, too, that's real significant is what used to be a credit score that was good in the mortgage industry was above a 660.
Right.
Now, Fannie Mae, Freddie Mac, and many investors give you a penalty to the rate a bit if your credit score is below 720.
Is that right?
720 used to be an A+, but Fannie Mae, Freddie Mac, if it's 720 or less, you're getting a slight hit on the price.
So not quite a subprime, but I mean, you're not really a prime.
Yeah, it's not subprime, but I mean, what used to be A+ is now A-.
Well, that's interesting. And I believe that the credit scores are coming down.
Yeah.
Only because, matter of fact, I had one of those rare clients who had an 820 credit score, an 820 credit score. And she's now applied for a mortgage, and she was flabbergasted that her score is now 802. And I said, probably. And I said, how many credit cards you have? And she said she had one. I said, what was the limit? She said 10,000. I said, I bet you they reduced it to 5. Matter of fact, it happened to be Citibank. I said, I bet you they reduced it to 5,000, and that's what reduced your credit score.
Yeah, that'll do it if they lower your credit score.
Just a quick question before we go to a break is a question on investors. I understand now investors are only allowed to buy 4 properties. Is that the limit?
That's correct. It used to be 10, and last year that was reduced by Fannie Mae and Freddie Mac. It's really the number of mortgages, not the number of properties you can own.
Okay.
You can own 10 still.
If you pay for more cash.
But you can only have 5 mortgages, including